hey, Kris, I just bought this amazing property and it's gone up a ton in value. And I just don't know what to do at this point. Should I sell it or should I keep renting it? I don't know what the market's gonna do. What do you think?
James, it's actually a really good question. It's one that a lot of people have because here's the truth. The market, is it just gonna keep going up forever or when's it actually gonna drop? And if you knew how to time it, you could make maximum money. So that's what we're gonna talk about today.
One shot, now the future is yours, go! I'm turning dreams into reality, yeah. It's one shot, now the future is yours, go!
All right, James, listen, I'm just arriving here in studio. I'm gonna make you a YouTube video so that you and everyone else can know the answer to this. Will the housing market ever go back down? Because it has just gone up and up and up. James isn't alone. Just this morning, I was talking to another new investor. She had bought a home in Austin and she said, Kris, my home has gone up $200,000. And she says, I wanna know, like, should I sell it? Should I refinance it? Should I keep renting it? What do you think? Well, if you knew that the housing market was gonna keep going up for a certain number of years, let me ask you, would you wanna just hold on to that property that has done so well and have it continue growing in value, making you good cash flow? Or if you knew that it was gonna keep going up, wouldn't you wanna make that same amount of money on 5 more houses? In her situation, she said, well, Kris, I think the housing market's gonna go up another 100 grand. And my thought is, if you trade that house for 4 more, then you might pick up not $100,000 more benefit, but $400,000 more benefit. But that sounds a little risky because what goes up must come down. Let's take a look at all the different factors that are allowing the market to continue going up, because ultimately by the end of this video, I'm going to share with you my prediction on exactly when the housing market is going to crash and what you need to be focused on right now. This comes straight from the New York Times. It talks about rising interest rates. This is a little scary. It says on March 16th, the Federal Reserve increased its benchmark rate at 1/4 of a point in an effort to curb inflation, which is at a 40-year high. As a result, on March 17th, rates on a 30-year fixed rate mortgage averaged 4.16%, up from 3.09% a year ago. Now, that is basically a full point difference. And I think the Fed is thinking, hey, guess what? There's a huge demand for people wanting real estate, but maybe if we raise the rates, this will actually help fight inflation, and maybe it will curb people's appetite from wanting to buy real estate. The question is, did it work? Well, I'm going to tell you right now that Bank of America, one of the largest banks, weighed in on this. And here's what they had to say when it comes to predicting growth. They said, while typically a spike in mortgage rates would cool the housing market, a new report from Bank of America says that this won't stop the housing market from posting strong home price growth this year. In fact, they predict that the US home prices will finish 10% higher in 2022. Come here, I need to make sure that you understand what this means by 10%. That means if my house is worth $400,000, 10% of that is another 40 grand. My house is gonna go up another 40 grand? 40,000 was what I used as a down payment when I bought it 3 years ago. Are you saying in 1 year, I'm getting 100% return on capital? This is what people are feeling the last 2 years all over the real estate market. And right now, we're not only gonna have another good year, but likely a few more of those to come. While the Fed is hoping that this is going to curb appetite, in fact, they've announced, hey, each quarter for the rest of the year, you can pretty much anticipate that we're going to keep bumping up the rates a little bit. Is this really going to cool the housing market? While climbing mortgage rates could slow the housing market over the long term, Bank of America went on to say that it could increase buyers' urgency as they rush to lock in rates in the short term. This, in combination with record low inventory, keeps demand and prices super high. In other words, we're not missing 500,000 homes. We're not missing 1 million homes. We're not missing 2 million homes. The last time we checked, we were missing over 5 million homes. Increasing the rates, you know all that does? It does spike this urgency. It says, hurry, let's go and buy more. And what's happening to days on the market? That number is dropping again, and people are saying, hey, rates are gonna go up. If we're gonna buy, we better buy right now because we don't know the next time that rates are gonna be as low as they are. In other words, this is not moving the needle. This is such an easy market to read. Real estate is not rocket science. It's not to be confused with the stock market that nobody can really predict. Real estate moves in very, very predictable cycles. It's not erratic like the stock market. Here's what I want you to understand about real estate. As long as we have a need for houses, prices historically have never gone down. We don't need millions of homes and then all of a sudden prices drop. It's the opposite. The greater the demand there is for real estate and the less supply that we actually have, the more it bumps up prices. So if you take a look at where we're at in the median and how much it's gone up in just the last couple of years, we were sitting a few years back right around $260,000, $280,000. Just check out how drastically that number has bumped up. Check out the last 65 years. You see real estate climbing in value, climbing in value, climbing in value. And then we have the crisis here of 2008, and then it recovers, and then it's climbing and climbing. Look at the spike right now. Does this growth curve looks like it has shifted trajectory? Well, I'm telling you that when we eliminate this historic missing supply of homes that we need, there will be a really huge correction. And when I say huge, I mean, I think we're going to experience one of the most devastating drops in real estate that we've seen since the Great Depression. Why am I saying that? Because if you look at this growth curve right here, we study and understand over the last 65 years that on average, the market goes up 4.65%. But when the market has a crazy year and goes up 17%, and then 11%, and 10%, and you ask, when the market does come down, when we use up all of our inventory, where will it go down to? It's going to go back to the 65-year average as if the market had been growing at 4.65%. What does that mean? It means that right now I'm tracking the current median, but I'm also tracking what the median should be because I am not buying homes above that price. I'm buying below. Check this out. In January, the national median purchase price of a home reached $408,000. This is up from $327,000 in 2020. I might also add that that is up big time from $260,000 in 2019. Basically, this is a 24.8% growth nationwide in just 2 years. This is the fastest growth in history. Now, this is what makes this particular economy such an anomaly. We're hearing all of these historic numbers. We haven't seen inflation this bad for 40 years. We have never historically had this many millions of missing homes. Historically, last year, we never had rates as low as they were. And right now, we're saying that in our history, this is the fastest growth, market up 24%. This is not sustainable, but it also won't be resolved until people get the houses that they are demanding. And right now, if every builder builds as rapidly as they can, it could literally take 5, 6, maybe even 7 years before we can satisfy all that missing demand with the supply that they are requiring. While we are experiencing an anomalistic economy, you need to rest assured that it's still simply doing what it does. It's all about cycles. There's a book out there called The Fourth Turning, and it basically says every fourth cycle is like the big one. We are most certainly in that fourth turning, and we're just experiencing a very exaggerated cycle where the market's going to go up incredibly high, and then it's going to drop, which means that we're really facing two waves right now. If you're a subscriber on my channel, I'm here to show you the easiest path on the planet to make millions of dollars in real estate. And here's what the numbers are showing me. The next 5 years, I have to buy as much real estate as I possibly can. When the demand goes from missing millions of homes to hundreds of thousands, you're going to see me pull away into very safe markets, and then there's going to be a huge crash. And when that happens, that market will take time to recapitulate. And I'm going to be at the auction block. I'm going to be at the auction house. I'm going to be buying homes cash likely at a 60, 70, and in some situations, maybe an 80% discount. It means that I can buy the right kind of home right now and make hundreds of thousands of dollars on it if I'm smart and intelligent and get some velocity. But it means that after the market corrects, I could do the exact same thing. We have a back-to-back market cycle that is working in your benefit and my benefit. Home prices rise and fall in predictable cycles. That's what you really need to understand. Despite record high median home prices, we're still in this golden zone right now. Is the market going to crash tomorrow or the day after? It can't. We must resolve the missing homes from the supply. You need to understand that this period of growth is not going to last forever, but I've shared with you my prediction on how long I think it is going to. And here's the question. What are you doing right now to take advantage of it? So this woman that asked me about what she should do with this home, I said, well, honestly, if one home made you this $200,000 and if you knew that the market was going to keep going up, my advice is not just to keep renting it. My advice is for you to sell it, do a 1031 exchange. This will avoid paying any capital gains. You're going to roll all of your profits and original down payment into more properties, which means she might be able to buy 3 homes instead of 1. And if that market, for example, goes up another 100 grand, there's 100,000 on each one. There's now triple the tax benefits. There's triple the cash flow. There's all sorts of benefits that she stands to gain if she's really leveraging this economy. So I'm asking you, do you have money tied up in a 401k, in an IRA, in an annuity, in the stock market? I got news for you. Inflation is at 7.9%. And it's going to teeter and move towards 9, 10, and maybe get into the double digits. And if that happens in just the next year, then over the next 5 years, you can do this. You can say, well, here's all of my money. I've stacked it up. And in the next 5 years, I could literally lose half of it, meaning lose half my buying power because of inflation. Now, the rich are counting on this. And you know what they're doing? They're moving all of their money into the game of real estate. And that's because hard assets move with inflation and the soft assets move in the inverse effect of inflation, which means that how are you going to make millions of dollars and how are the rich getting richer? When we have these incredible inflationary times, they're saying, let's go buy more real estate. Bottom line, I am buying as much real estate right now as I possibly can. My question is, are you? There's really only 2 reasons that you wouldn't. The first one is you're scared and you don't really know how. The second one is you'd like to tap some type of system that could hopefully make it turnkey or make it move a little easier for you. And if you don't have that, I got maybe good news for you. You may not be aware that I partner with people all over the world and I help them buy the right kind of real estate in the top markets out of the entire United States. Doesn't matter where they live, international, Canada, or here stateside. And what I'm doing is I'm helping them pivot their money from these losing pockets of 401ks and IRAs and equity in their home even, and we're putting that in the game of real estate where they're making a whole lot of money. Right now, I look like a hero to all of my partners because we're just killing it and crushing it, and this is going to be happening for years. And if you want to kill and crush it, even if it's just to protect yourself and hedge against inflation, it's the smartest thing financially that you can be doing right now. So there's a link below where you can learn about partnering with me. It may be for you, it may not. If I were to give you just a couple of tips, my team is going to vet you based on A, do you have money to put in the market? B, are you teachable? C, are you open-minded? And D, do you like the advantage of taking advantage of someone's billion-dollar track record? Someone who's done this thousands and thousands of times, over 5,000 times. And do you want to ride the wave? And if the answer is yes across the board, you definitely going to want to click that link. My team will be in touch with you. And we'll talk about what it looks like for you and I to go in together and crush it. All right, Kris, kind of intriguing. Where are these hot markets where you're getting these really high ROIs? What is this team of 200 experts? How are you actually manipulating the market for getting your hands on the very best deals? All great questions. I actually made a video sharing with you some of my very hot markets where I'm killing it today. Check this out and I'll see you there. So you got to be on the other side of the door. You can't be in this room.
Be gone.
Run away. Oh, that's a lot better.